We're here because free speech is under attack. We're here because people are being convinced that socialism works. We're here because people are being judged guilty until proven innocent. We are fighting back with facts. This is not a safe zone, so buckle up, Buttercup. This is the raw, naked truth.
Hello and welcome to the Raw Naked Truth. I'm your host, Eric Lopkin, and with me today is Chris Calandra from Elliott Wealth Management for our Wallet Watch segment and talk about what's going on with the markets and what you need to know. Chris, good to have you back.
Yeah, I was looking forward to this. There continues to be an awful lot going on, and a lot of it is negative. There was Eric, a recent Gallup poll, I think, captures where the country is mood-wise, and it was 88% of Americans viewed the economy as either fair, which was 34%, or poor, which was 54%. So that's 80%. That's an incredibly high number. That means it's not just Democrats or Republicans, not just old or young, city or rural. I mean, that is a huge amount of people thinking things are not going in the right direction. That same poll found that 85% of Americans think the economy is worsening. Really incredible stuff. It's hard to get 9 out of 10 people to agree on.
It really is. And you don't get to those numbers without crossing demographic barriers, political barriers, psychographic barriers. This is across the country.
That's right. And what I wanted to mention today is this sour mood comes from what you might expect: inflation, the Fed raising interest rates, fears of a recession, people unhappy with the body politic. You have the war in the Ukraine, and this has led to the stock market and candidly the bond market having a very difficult time this year. As of this recording, you know, the market was in bear market territory, down significantly this year. But what I want to watch, what I've been talking to my clients about, and my team is focused on watching for the second half of this year, is can the markets climb what is called the wall of worry? It's an old Wall Street adage. Sometimes when there's a lot of bad news, the market can still mount a recovery, because if you could get an environment where, number one, people might get adjusted to the bad news and just kind of, okay, it's bad, but I'm not as panicked as I was before. You kind of adjust, and sometimes that could help the markets climb the wall of worry. Additionally, what can happen is you get bad news, but it might not be as bad as expected. So inflation's been running at, let's say, 8.6%, but you could get an environment where you get a number of 7.6, which is terrible. And a few years ago, people would have been utterly frightened about 7.6, but compared to 8.6, 7.6 isn't so bad. I think the ingredients are in play where maybe the second half of the year, you can start to get some supply chain improvements. The Fed raising interest rates might have the desired effect of dampening inflation a bit. The American people will have a chance to vote in November and have a chance to have their voices heard and maybe course correct and put some different people in power. It looks that way. So I think there's a number of things that can help the markets climb the wall of worry in the second half of the year. I don't think it's going to be instantaneous. It'll probably take a little time. There are a lot of negative things going on, but that's what I want to watch. Can the markets climb the wall of worry in the second half of the year? I think there's a good chance that they can.
Yeah, I think, part of what's going to drive the markets is actually, consumer sentiment is at a very low point. In fact, lower than it's been in quite a while. But
Yes.
people have a tendency to get used to things, even if
That's
they're
right.
even if they're terrible. I was talking to somebody the other day who saw a gas price. They were able to fill up at $4.15 a gallon, and thought, "Hey, that's not bad," because it was like 15 cents less than everywhere else. It's still
Yes.
a horrible price to pay, but people are starting to adapt. And once they do that, it's like, yeah, they start going back to fairly regular behaviors. And of course, I've spoken to a number of financial folks and they all say the same thing. And I'm sure you'll agree to this. It's not about timing the market. It's about time in the market.
Yes. Yes, I agree. And the markets have had bad periods like this before throughout history. It's built into the long-term numbers that are attractive, appear attractive, but these events do occur. This one's a little different than the last one, which was a little different than the one prior to that. But they do occur. This country is a great country. It has a dynamic economy. It will adapt. It will evolve. This will pass, but it is a painful time, and it's sad to see, Eric, not just for the markets, but just sad to see that the country is going through as much pain as it is. It's kind of sad to see, as a proud American, and I know you are too. It's sad to see that we're going through this difficult period, but I think it'll be okay. And I want to watch for this wall of worry. It's a key topic for me the second half of the year and beyond.
So what are some of the factors that can boost the market over the wall of worry?
I think getting inflation so that the growth is not as great as it was before, to slow the rate of growth. We don't need it to go back to where it was before, but if it could stop increasing and seem to level off and decline a little bit, would be one. What will bring that about is if we could improve the supply line difficulties a little bit, and if the Fed, through its interest rate increase policies, I think there's a good chance that maybe inflation later in the year won't be as white hot as it is now. I think that's key. And I also believe that with the election in November, if a change is made, and this is not to say that the Republicans are great, I'm not suggesting that in any way, shape, or form, but the American people will have a chance to do something and sort of speak about what's happened the last 2 years. And if you listen to the polling, and there's anecdotal example in our daily lives, people are in a pretty foul mood when it comes to the economy. If they have a chance to go to the polls, maybe vote some new people in, maybe make a change in leadership, put the Republicans in power in one of the two chambers, they may feel like, all right, we did something. That's psychological mostly, but I think those are some things that I believe will help the market climb the wall of worry. And one other thing that I'll add to that is US businesses have a great ability to adapt. We used that word already before. And so they're struggling now. Corporate America's struggling now. But, they struggled during the pandemic and they figured stuff out pretty quickly, and they were able to thrive and enter into a good phase after a nasty economic episode related to the pandemic and the health part of things. I think the US industry has a chance to do that again. So I believe the wall of worry climbed by any number one of these things, or maybe a combination of all of them in small doses.
Excellent. Well, Chris, thanks for being here.
My pleasure.
And as always, we remind our listeners, when we're talking about financial matters, everybody's situation is different. Check with your personal financial advisor before making any decisions. You've been listening to Raw Naked Truth. You can catch every episode at xvadio.com/podcasts, the Apple Podcasts app, Google Podcasts, Spotify, iHeartRadio, Stitcher, Amazon Music, Audible, and wherever you find podcasts. We'll see you next time.